What is going on, guys? The dollar is crashing, bonds are getting dumped, gold is ripping like crazy. It's up above $3,200 per ounce. And when I see all of this happening at the same time, it's telling me that something is broken in the financial system. People are dumping dollars, they're dumping treasuries, and they're moving into gold, the safe haven asset. We saw earlier this week that Trump paused tariffs on a number of countries, but I wouldn't really call it a pause. He basically lowered tariffs on a variety of countries down to 10%. We still have those high tariffs on China, Canada, and Mexico in effect. So really, these tariffs, it seems like these tariffs are still pretty much in effect, and just like a couple of countries got lowered down to 10%. But anyway, we're going to talk about why Trump did this, why he was forced to basically lower tariffs on some of these other countries. We're going to talk about some of the risks in different asset classes and where you want to be. And right now, I think there's only really a couple of places where you want to be. So we're going to get into all of that. Before I do, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a Bitcoin tip. Now let's get into it. Now there's been a lot of stuff going on over the past week, guys, and it's been a little bit difficult for me to keep up with it all. When we got this initial Liberation Day announcement on April 2nd, when Trump announced these extensive tariffs on all these trading partners for the US. I was working on a video about that. We saw stocks crashing. And then earlier this week, Trump flips and he reduces tariffs on a lot of these countries. And we see all these stocks bounce back. And there's just been so much drama over the past week that it's been a little bit difficult to keep up with. But I'm going to start at the beginning. So April 2nd, we get this Liberation Day announcement, and Trump announces extensive tariffs on all the U.S. trading partners. Obviously, the big one was China. He started out by raising tariffs on China by 34%, bringing them to a total of 54%. And then China clapped back and said, you know what? If you're going to raise tariffs on us, we're going to raise tariffs on you. And then Trump said, oh, you're going to retaliate and raise tariffs on us? Well, then we're going to raise them on you again by an additional 50%, which brought the total tariff on China to 104%. And China and the US have kind of gone back and forth, and they've kept raising each other up like it's a game of poker. And now we're currently sitting, from the latest data I've seen, with a 124% tariff on China, and China has a 124% tariff on the United States. China is not the only one who got hit with tariffs. Everyone got a piece. Trump announced a 10% baseline tariff on pretty much all of the U.S. trading partners, and some countries got hit worse than others. A lot of those other countries over in Eastern Asia got hit pretty hard. I think Vietnam had a tariff of around 40% or something like that. So a lot of these countries where U.S. companies do a lot of their production in Asia got hit with a high tariff. We know about Canada and Mexico and the 25% tariff there. And I believe that 25% tariff is still in effect. As you can see in this chart, after we got that announcement on April 2nd, we saw the stock market crash hard. The stock market had some of the worst days that we have seen in a while. And this makes sense, right? The US is disrupting supply chains with these tariffs. They're increasing expenses for all these US companies. And what they're really trying to do is they're trying to change the way the world works. And the world is not happy with that. The world has been exporting and selling to the US for decades now, right? They've become used to having the US as their main customer. And now the US is saying, hey, we don't want to be the customer anymore. We want to be the producer. We want to be selling to you guys. And the world does not like that idea. So it makes sense that, we saw companies like Apple crashing. Apple does a lot of their production in China, in Eastern Asia. I think like 90% of their production is done over there for things like iPhones and MacBooks. So we saw the largest company in the world, Apple, tumble. We saw companies like Restoration Hardware down big. I believe that on April 3rd or April 4th, Restoration Hardware was down 40% on the day, and that's because they import a ton and do a ton of their production in Asia. So the stock market obviously did not like these tariffs, and it makes sense, right? It's going to lead to much higher expenses for these companies, these US companies, and that means that they are going to be raising their prices. So this is going to have a big impact on the consumer as well. But you also have to think with these tariffs, with higher expenses, these companies are probably going to need to cut back in other ways. We could see massive layoffs across the US. We could just see a complete economic contraction. And with that, these companies may not really be able to raise their prices, right? If people are making less money, if people are unemployed, then they can't buy an iPhone for $3,000. So it's definitely not good for business, all these tariffs, at least in the short term. And that's why we saw a big crash. But as I mentioned before, earlier this week, we got the pause, if you want to call it a pause. It looks like Donald Trump just reduced tariffs on a number of countries. And with that, the stock market bounced back. We saw the stock market have a big day on, it was either Tuesday or Wednesday when he made this announcement. Stocks like Apple were up 15%. Amazon was up. All stocks were up big because they like this news, right? But really, it wasn't, to me, it wasn't that big of a pause because they reduced tariffs on a number of countries down to 10% for the next 90 days. But I believe they're keeping the tariffs on China intact, so that 125% tariff is going on right now. We also still have the high tariff on Canada and Mexico. So although it was some positive news for business, I really didn't think it was. I think it may have been, overbought on the news, the stock market, because these high tariffs on our three largest trading partners, China, Canada, and Mexico, are going to have a serious impact on U.S. companies. Now, I definitely think we will see the tariffs on China reduced. I'm not sure when that's going to happen, but I just don't think the world can handle this much tension between the world's largest consumer and the world's largest producer. And after we got that news of the pause, we then saw stocks decline the following day, and they've been kind of chopping up and down throughout the rest of the week. I think today, the last time I checked, they were pretty flat. So lots of uncertainty in the stock market, and it's not just in the US. As I said, the world is reliant upon the US as its customer. So these stocks in other countries like China, stocks in Europe, stocks in Japan are all taking a hit. And I personally just wouldn't feel that comfortable right now if I was heavily allocated to stocks. These tariffs are not good for business. They're going to disrupt things in the short term. And for me personally, there are just too many unknowns out there. I would not feel comfortable right now if I was heavily allocated to stocks. But there's another place that I would feel even less comfortable, and that is the bond market, because we have seen some weird stuff happening in the bond market recently. After we got this April 2nd tariff announcement, we saw people selling out of stocks and they were buying into bonds. And this is exactly what the US government wants and needs. It's no secret that the US has a big national debt problem. I've talked about it a ton on this channel. And this year in 2025, the US government needs to refinance around $9 trillion worth of debt. The problem is when stocks are ripping, when Bitcoin's ripping, when all these other assets are ripping, nobody wants treasury bonds, right? They rather just buy stocks. So the government, part of this strategy for them crashing the stock market with tariffs is to create demand for bonds. And that was working at the tail end of last week. On April 3rd, the day after the tariff announcement, we saw the 5-year Treasury down 20 basis points, the 7-year down 19 basis points, and the 10-year was down 15 basis points during the day. And then we saw bonds continue to fall on the 4th, the second day after the announcement. So the plan was working, right? People are selling out of stocks and they're buying into bonds. But then we enter this week and something starts happening. Stocks are crashing, but bonds are also crashing. People are selling out of US Treasuries. And it looks like someone blew up in the Treasuries market. People were talking about the basis trade blowing up, which I think is where, I don't really quite understand what the basis trade is, but I believe it's when someone's betting on bonds. They're trying to arbitrage bonds and they make a bad bet, right? And then they have to sell the bonds they have. So we saw people selling out of bonds and stocks at the same time, which is not what the US government wants, right? They want these asset classes to be acting inversely. They don't want them both to be crashing. And shortly after, we saw Trump announce this tariff pause. So I believe this is why Trump announced the pause. He wanted to provide, some assurance to the markets as it seems like something was breaking in the bond market. If we go ahead and take a look at a chart here, this shows the 30-year Treasury bond yield over the past month. As you can see, after we got that announcement on April 2nd, we saw people buying into bonds, which is what the government wants. But around April 6th, April 7th, we saw yields spiking as people were selling out of Treasury bonds at the same time as people were selling out of stocks. So pretty crazy stuff. And then yesterday, things got even crazier. We saw this bond market sell-off continue, and we saw the dollar tanking. The dollar was dropping super fast, and the dollar dropped below 100 on the DXY, the dollar index. Let's go ahead and take a look at a chart of that. This shows the dollar index over the past month. And as you can see, since we hit April, the dollar has been crashing. And yesterday we got news that Chinese investors and perhaps Japanese investors were dumping their US treasuries and buying gold. So we saw the dollar tanking, we saw treasury yields rising, and we saw the gold price rising like crazy. And when you see the gold price rising like this, like we've seen in the past couple of days here, you know that something is broken. That is not normal. Gold is not supposed to be volatile, but gold went up like over $200 per ounce over the past 24 hours. It's currently trading over $3,200 per ounce, and people are continuing to buy into gold. Let's quickly take a look at the gold chart here over the past month. As you can see, over the past couple of days here, really since April 8th, it looks like gold has been ripping up higher. And this brings me to the conclusion of this video. Where do you want to be with all this chaos going on? When I look at the stock market, I just feel like there is way too much uncertainty out there. We really don't know what is going to happen with these tariffs, which tariffs are going to be escalated, what some of the repercussions could be for businesses. So to me, and when we look at the stock market, it's kind of been this bet on liquidity in the macro environment over later years. If I'm betting on the macro environment and betting on liquidity, I'd rather just be in an asset like Bitcoin or gold. I just feel like there's so much risk out there in the stock market right now. Who knows what's going to happen? We could see QE come in here soon and push the stock market up higher, but if that happens, it's also going to push Bitcoin and gold up. So I would much rather be in Bitcoin or gold than the stock market right now. Looking at treasuries, I've never been a fan, and I've been very vocal about that on this channel. I think the dollar is failing, so I don't want to buy into treasuries because what is a treasury? It's a claim on future dollars. And I don't know what those dollars are going to be worth. I think they'll be worth nothing someday. So, never been a fan. And here we are in this risk off situation where everyone's selling out of the stock market and fixed income is supposed to protect you. And look at what's happening. The treasury market is falling apart. So, I just don't trust this shaky financial system that's really built upon treasuries. And it looks like something is broken right now. There's really only two places that I'd want to be right now with things looking shaky in the stock market, with problems in the bond market. And those two places are gold and Bitcoin. We know that when things are broken, when there's a crack in the dam, how does the government fix it? They print money, right? They come in and they provide liquidity. And if these foreign investors are selling out of US treasuries, which is something that I've always worried about, there are a good amount of US treasuries being held outside of the United States, trillions of dollars worth. If these foreign entities are selling out of these treasuries because they're mad at the US for these tariffs and the treasuries market is tanking, the Fed will have to come in and do QE. They will have to come in and save the market. When the Fed comes in and buys treasuries, what gets pushed into the economy? Dollars do, right? And that pushes the price of Bitcoin and gold higher. Now, looking at gold, gold has obviously gone on a great run over the past day or two as people are selling out of treasuries and buying into gold. But really over the past year, we've seen gold go on a great run. It was under $2,000 per ounce. It's currently around $3,200 per ounce. So gold has gone on quite a rally. Do I think people will continue to buy into gold? Yes, gold has been a safe haven asset for a long time. And especially if we're seeing this dump of US bonds, where are people going to move if they don't feel comfortable in bonds? They're going to move to an asset like gold. So we will see if gold can continue the returns that we've been seeing, but I expect gold to continue moving up higher as we have this global havoc. When we look at Bitcoin, Bitcoin really is a safe haven asset when you look at its fundamentals, but historically it has acted like a risk asset. Now, last night I saw something I liked. The dollar was crashing below 100 on the dollar index, and we saw Bitcoin moving higher. So it wasn't moving higher like gold, but I think that some people were buying into Bitcoin. And I think that this situation has the potential to turn Bitcoin into more of a safe haven asset in the eyes of more people, right? If they can't go into treasuries, if they can't go into stocks, if they feel like gold is maybe a bit overvalued at this current price after this big rally, then people may look to go into Bitcoin. So I personally love this setup for Bitcoin. I think treasuries and stocks falling at the same time is a great situation for Bitcoin because it forces people to look around a little bit. But we will see what happens. If the stock market does continue to crash down, could we see Bitcoin go down with it? We know that Bitcoin has that critical support level around 74K, and I personally think that Bitcoin will hold that support. I'm just seeing a ton of demand out there. Every day it's some new news, like a new company accepting Bitcoin and buying Bitcoin, or a country trying to create positive Bitcoin regulation. You also look at all this financial havoc we're seeing with the stock market, with the treasuries market. I think people are getting nervous and it's forcing them to look around, and it may force people to take a second look at Bitcoin and think, hey, maybe this is where I want to be. And we know that if the Fed does come in and provide liquidity, if we do see QE, if we do see rates drop, we know that Bitcoin is going to soak up that liquidity. Bitcoin is a liquidity sponge. So I personally am really liking this setup for Bitcoin right here. I think that it has a lot more upside than gold, although it does have that risk since it's still sort of treated as a risk asset by some. But I think that's going to shift at some point, and this could be Bitcoin's opportunity to be looked at more as a safe haven asset, right? It's a decentralized asset and it's not really connected to some of these plumbing problems in the traditional financial system. So those are the two places that I feel comfortable being right now, the two safe haven assets, Bitcoin and gold. I will be closely following what is happening with the treasuries market. That's really what's most interesting to me, what's happening with dollars and treasuries. And we'll keep our eyes on the stock market as well. And I'll be back with a new video soon once we get some more news. I think the next couple of weeks are going to be volatile and filled with drama. So I'll be back on here. Make sure to tune back in. That's going to wrap it up. Thanks for watching. If you didn't like and subscribe, please make sure to do that now. Really appreciate your support. I'll see you next time.